What's up, boys? Welcome back to another video. So this is the intro for the video that you guys are going to watch now. So just to let you know, guys, this is the first video of the new playlist that will be uploading, I think twice a week or once a week whenever I have time. So this playlist is for beginners only, for like people that want to learn what is trading, what is forex trading and everything. So yeah, guys, I hope you guys like this video, and yeah, see you guys in the next one. What's up, boys? Welcome back to another video. In this video I'll be talking to you guys. I think I might make like a full bootcamp about this, but I don't know, I'm not sure. This will be the first video I will be uploading on my channel. So this video is about what is forex trading, what does it stand for and everything, how does it work, how do people make money of it and everything. So the first thing, what is forex trading? So I don't know why I can't write. I don't know why. Let me see. Oh, now I know, because of this. Okay, so forex trading stands for foreign X. Hey, let me just 1 second. Okay, now that we got this, what is forex? Forex stands for foreign exchange. I think, let me make this smaller, a little bit more smaller. That's perfect. Okay, so forex trading stands for foreign exchange. What is foreign exchange? Foreign exchange is, for example, for example, you from the USA and you go to Europe, right? So in the USA they use dollars, right? But in Europe they use euros, for example, as an example. So what is this? This is the exchange. You exchange X amount of dollars for X amount of euros. And how do people make money of it? For example, let's see, for some, let's put here. So $1 price is in exchange with euros is 1352 as example. This is for the dollar, right? And for the euro, let me remove this. And for the euro is, for example, I don't know what's there, I don't care. So let me just put this here. But for euro is 1472. So this is the exchange rate that you guys are looking for. So you giving them X amount of dollars to get X amount of euros. This is what it matters in forex trading. So these are decimal units, and I don't know. So basically what you're doing here is you're selling this and you're buying this. You're buying this and you're selling at this price. What that means is you will be buying at a higher price and you will be selling for some. Imagine you buy dollars at 1352 and then you sell and you exchange euros for 1472. You made, I don't know, I think that's 100 minimum. You made 100 of it. That's how it works. You buy in one currency and you sell in another currency. That's what forex trading is. That's like the easiest way I can explain. And yeah, now let's hop on, for example, another pair. Okay, for example, let's look over here, this chart over here. This is let's go to GBP/USD. Okay, let me remove this. Sorry, what are we here? For example, let me remove this. This right here, you guys might see this, the red 1 point. So a British pound's value as of right now is 132,382, and the dollar's price is 132,473. What that means, you're selling British pounds and you're buying US dollars. How do you make money of it? You make money when the market goes down or goes up. Easy as that. For example, here you sold, you would have made X amount of money. That depends on how many contracts you use. What I mean by contracts is the lots that you use. For example, forex trading is a decentralized market, right? That no one has control over it. Okay. So how does it control? How is it controlled? So basically, is when, for some people like me, you exchange money for products, services and everything. So when is the most amount of money that is moved between in one day. Where is the money that moves the most in what sessions? So we have AN session, we have London session, and we have New York session. So these are on 3 different continents, by the way. So AN session is Tokyo session, or just AN session you can say. Then we go London session, London session, and then for the last one is New York session. Let's just write New York like this. Okay, so in AN session, what the market likes to do the most is, you can say, consolidate, aka manipulate a little bit, but not like at the same level as London session, New York session. Because why? British pound and dollar is the currency that people use the most, also, and it has more value. For example, the euro and the GBP has more value, and New York, you got, the dollar, right, has more value as well. So these are the 2 sessions that we as traders look for to trade, because we don't want to chop price in AN session, So basically AN session, what it likes to do the most is just chop price like this. When it goes like this, it's just consolidating, right? It goes in a range, in one range, barcodes, right? You get it. But in London session, oh my god, what happened? Why can I go? Okay, so in London session, what the market likes to do the most is fake outs and manipulations. So imagine we have AN session here is accumulating price in a range. What I mean by range is the price is going from one side to the upside, the downside, upside, in an equal zone. So from the high to the low, it's staying in that place. It doesn't go more over, or it doesn't go like down. So this right here, we call this accumulation. So accumulation. Okay, so this will be your accumulation in AN session. Now, what we're looking for in London session. So in London session, what we looking for is we might be looking for a fake out or for a manipulation. What I mean, so AN session, imagine, let me mark for example this is the high of the AN session, right? This right here. And this is the low. Okay, we see London session opens up right now as of today. What's today? 26th of November. So at 8 o'clock. So what the market will do at 8 a.m. in the morning London time, market opens, either the market goes down to take out AN sessions low, or either the market goes up to take AN sessions high. So what are we looking for here? So this will be your manipulation. Okay, in this case we are bearish, okay, because of previous days and everything. We are bearish, we are looking to sell, we are not looking to buy. Okay, the example here will be 8 a.m. London session opens, the market goes up and takes out the AN sessions high. What are we looking for here? So after the market has taken AN sessions high, okay, we will be looking to sell in London session and New York session. So basically we got 2 opportunities to sell at the moment. Okay, so imagine here the market has made an inverted that will be the next video. Okay, if the market has made an inverted fair value gap, okay, the market after it makes the inverted fair value gap, you place your entry, you sell. Okay, you enter here, you put your stop loss just above the London high. What are you targeting here? You are targeting here, what the thing you will be most likely to target, and it will hit TP, is the AN sessions low. Okay, easy as that. Okay, but now what's the next session that we have? the next session that we have here, okay, is the New York session. Okay, imagine the market has taken a low, then it goes and takes a high, but then it ends, and then we have here the New York session. New York session will distribute. Okay, let me just write here. So AN session was accumulating, London session was manipulation. Okay, like this. Let me make this a little bit more smaller. There you go, guys. And remove this as well, so it's better. Okay, I know this is a complete mess, but let me remove everything. Okay, so here we go again. AN session was chopping, London takes high, or the AN session goes down, you enter the inverted fair value gap right here, you wait for AN session to New York session to open. Then what are you looking for here? You're looking for liquidity sweep. Okay, you're looking for a liquidity sweep to the downside, to the upside. But remember, if you're bearish, you're looking for sells. If you're bullish, you're looking for buys. So in this case, we are bullish. Okay, market, what will do most likely, opens at 2 p.m. UK time. The market will go down here, target this liquidity over here that's down here in the London session. Your entry will be for some at this point at a confluence, for some at fair value gap, inverted fair value gap, max order shift for liquidity sweep, and then you place your entry. Okay, what are you targeting? You guys are targeting London's high. Okay, you guys are targeting London's high. Where you put your stop loss, don't put it too tight, guys. Give it some breathing room and shit. Okay, because bro, trust me, you don't want to get stopped out or fucking lose money. You'll be fucking sad for the whole week, I'm telling you. Okay, let me remove everything now, and let me write you guys the accumulation manipulation process. Okay, so here, AN session, what they did, yes, accumulated. London session has manipulated, and then New York session has distributed. Distribution. It distributes. Okay, easy. Then put this down here. But remember, these are 3 different sessions, so you need to trade them like they are 3 different sessions. Don't trade like it's one. Okay, I will put now this as a marker so it's just clear for you guys. Okay, London's AN session manipulating, accumulation. I'm gonna repeat this again and again, I don't care. Okay, then what do we have here? Then we have London session. For example, opens here, it takes the highs. Okay, I'll mark them. You place your entry. Okay, just at a confluence after it takes a high. Okay, what are you targeting after? You're targeting AN session slow. Okay, easy. Then you wait for market to make its movements, and then we have a New York session. What are we looking for here? We're looking for liquidity to see here, or here. Okay, for some in this case it took the liquidity to the upside. Okay, what are we looking for here? We're looking for inverted fair value gap, max order shift, fucking liquidity sweep, liquidity. I don't care, just use it, bro. Just enter, and then what will you be targeting? You will be targeting this low of the London sessions. Okay, so like this. Okay, let me mark for you guys the highs that it has taken. So it takes the high here. Okay, and this takes the high here. Okay, I'll mark here the liquidity here the New York session has taken. I will target. Yeah, that's it. Easy as that. Doesn't get more easy than that. Let me mark this as its liquidity, and this as well as liquidity, and this as well as liquidity. Okay, this guy will be your AMD concept. that got me my funded account passed. Okay, now let's move on to liquidity. What is liquidity? Let's move down. So liquidity is when in a small, it's like a small, I don't know how to say, but I know how to say, but it's like a small movement but a big movement, right? So what I mean by small movement, for example, in this point right here, okay, the market, this is liquidity. Okay, the market, this is a candle, this is a candle, this is a candle, this is a candle, 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 and candle, and candle, and candle, and candle. Let's remove this one. Okay, what is this? This right here, guys, and let's make this one a little bit big. This right here, guys, is liquidity. This right here, guys, is liquidity. All this is liquidity. Why? Liquidity is when, for example, people like me and you, retail traders, no other people, when retail traders put their stop losses and enter positions. For example, let's make another, let's make us example. Okay, this is the market. Okay, this is the market. High. Okay, so imagine in this point my entry was here, okay, of our inverted fair value gap on an IFVG, more known. Okay, I would have entered here. Okay, what would I have targeted? This, right? Another liquidity level. I'll show you guys after. Where would I have put my stop loss? Here. This is liquidity. This is liquidity. Matter of fact, let me mark for you guys all the liquidities. Okay, this is liquidity. It got taken here. Okay, let me mark it. This is liquidity. Got taken here. The market always is, the market is always moving, okay, after liquidity. Easier, it doesn't get more easier than that, guys. I mean, that's basic knowledge. I think that's the first 3 things that you learn from ICT. Liquidity right there. I mean, I know this is kind of boring, but yeah, you guys gotta know that where the liquidity is always. Another thing, the market always moves to the liquidity side. So basically, in short terms, let me write for you. Liquidity equals P equals, let me move this, man. P, oh my god, what then? So liquidity P equals stop losses. Okay, liquidity means people's stop loss. The market will hunt the stop loss to continue to the upside. Okay, let me show you guys a live example of this. I'll show you guys a live example of the AMD I show you guys. Okay, let's look for a trend. Okay, we see this. What do we see here, guys? We see equal highs. That's liquidity right here. So this is liquidity got taken there. Let me put this right here. Where else is liquidity? This is liquidity. We got taken here. Where is liquidity? This is liquidity. We got taken here. But remember, guys, this is external range liquidity. This is external range liquidity. This is internal range liquidity. But this is external range liquidity. This is internal range liquidity, and this as well, and this and this, but not this. This is not. This is external range liquidity. This is external range liquidity. This is external range liquidity. Same here, same here, same here, same here. Okay guys, so the two type of liquidity, okay, ERL. Oh my god, man. So ERL, aka stands for external range liquidity. Then we have IRL, not in real life. IRL stands for internal range liquidity. I've shown you guys where IRL is and ERL is, external range and internal range. Let me say again: external, internal, internal, external, external range liquidity. Okay guys, now guys, we have right here a nice example of liquidity hunting. Okay, we have a nice example of liquidity hunting. I will wait for you guys to check this out. Okay, and then in this same place, these same movements, guys, we have AMD. Okay, accumulation, manipulation, distribution. So let me show you guys. Let's do first AMD. Okay, Asian session, chopping rise. Okay, Tokyo high gets taken out here. What are you looking for here? You're looking for an inverted fair value gap to enter. For example, this one right here, you have for this inverted fair value gap to get tapped in. Okay, you enter at the body close right here. You enter right there, put your stop loss above this, above there. Okay, and you put your TP. You can put your TP at the 50% of the Tokyo session, or you can target liquidity. So in this case, I would have target this, and that's a 1 to 2 RR. Okay, now let's move again to where there is liquidity. Okay, so this right here would have been our accumulation. This right here would have been our manipulation, and this right here would have been our distribution. Okay, let's go back. After we see this manipulating in the London session, it takes the high, then goes to the 50% to take out the lows here, this liquidity over here, then liquidity, and this taps into this fair value gap. The market pumps up. So right here at the opening gap, I mean there's no opening gap, but still, what do we see here? First thing we see is a fair value gap right here. Okay, what else do we see as a confluence? We see this inverted fair value gap. Let me show you guys. This is one of the trades I took, right? So what will you do here? You guys will enter longs. Put your stop loss, put your entry at the body close of the candle. You put your stop loss at the 50% of the, well, for some you would have put it for example here, right? The fair value gap, and you can target it. You could have targeted, let's see. For some, you could have targeted these highs, these all equal highs that didn't get taken out, but they did get taken out here. Okay, so let's see, that will bring in a 3 RR. That's one of the models, right? That's one of the models of this video. I'll be showing you guys in the next video. I'll be talking about confluences. What are the confluences I have? How do you use them and everything? But as for today, I think we have pretty much covered what is trading, what is forex trading, what is liquidity, and I gave you guys a free strategy, easy strategy. I think everyone knows about it. I have explained about it, and yeah, but let me do just a quick recap for today. So in this video we have learned forex trading. Forex, what is it? What is it? So forex is foreign how do you say exchange? Yeah, exchange, foreign exchange currencies pairs. Oh yeah, the pairs. We didn't talk about the pairs. So the first pair that we have is GBP against the US dollar. So GBP against the US dollar. Second one, the main ones, I'll be targeting euro against the dollar. Then the third one will be USD JPY. So US dollar. So US dollar against the Japanese yen, or vice versa, JPY USD. I've never done that. Okay, this is the forex. Now let's go for the, I think it was AMD. Yeah, AMD one. Accumulation to manipulation, and 3 is distribution. Okay, I will show you guys. I'll just mark it here so you guys can see it. So we have this, and then we have this. Accumulating. Okay, manipulating. Then we have distribution. Okay, let me just guys right here, accumulation manipulation, and for the last one we have distribution. This is how it looks like. Take a screenshot which one, I don't care. And the third one will be liquidity. Where the stop losses are, where they get entered. There's 2 types and two names for the other ones as well. I will show you guys in the next video because I'm tired right now, I can't be asked. So